We are halfway through the trading day, noon right here, and we are here with the market action for you. It's a quiet day, but can you really blame the bulls at all after this mega heady rally that we've had over the last couple of days? Today is a day of slight profit taking. We are seeing that in the large cap universe. We're also seeing that in the mid cap index. Let's pull up the mid cap index up for you. Very flattish trends coming in. Just to talk about some of the movers and shakers on the large cap screen, stocks like Reliance Industries are still working in favor of the bulls. There's buying over there. HDFC is the other big one, contributing on the upside. But as I said, it is a day of profit taking. So whether you're looking at names like ITC or some of the other financials, there is a bit of weakness as well on the downside of the screen. Even actually HDFC is holding out with gains of about 0.4%. The mid-cap market, again, some profit taking in names like V-Guard and Voltas and Havells. But again, these are not big, very significant drops that we're looking at. 2 to 3% down on these stocks. Otherwise, it remains a fairly buoyant market. Well, on that note, let me say good afternoon to my co-host Reema Tendulkar as well. Hi, Reema.
Hi, Surabhi. Afternoon. Good to have you back. Let's directly run our viewers through all the top headlines. Okay, before that, we are awaiting the WPI inflation figures for the month of February. So Lata is here with us. Lata, what should we expect?
The poll is expecting that inflation will go up slightly, but it's 2.67. That's the estimate versus, 2.7 last month. So basically flat. But we could get a slightly higher number for the simple reason that we saw a little bit of the food fall in prices kind of troughing out or bottoming out when we got the CPI number. So chances are we wouldn't be surprised if we got a slightly higher than 2.7% WPI inflation. We also saw core inflation climbing up just a wee bit. So that could be another perhaps surprise factor. But actually, let me toss that to our guest. We have Tushar here with us from HDFC Bank. Tushar, what is the expectation? Is something important that we should look for in the WPI numbers? What would you look for?
No, I think fuel and manufacturing should remain broadly unchanged. But I think, as you mentioned out, the CPI pointed out to some bit of upside surprise. And that's why we could see, WPI number coming in a little higher than the market expectations, maybe 2.9 or 3%. Let's see if the rise in food prices is a very strong rise. And that would be, I think, an important factor to watch out for.
Okay. Well, you know what? Since we haven't yet got the WPI number, maybe you want to go ahead with the headlines and the markets, and if we get the WPI, we'll interrupt you.
Okay, as of now, awaiting numbers on a flattish curve, not a major bump up in wholesale inflation that's expected. Let's get you the headlines at this. Okay, before we get to the headlines, it's all over the place. 2.93, that is slightly ahead of the poll. We were working with a number of 2.67, so a minor inching up that's coming in. Lata, I guess we'll have to see if this is on the industrial product side or whether there's some kind of a leg up, I don't know, in the food side, but 2.93, the first number.
Yeah, let's wait and see whether, where exactly the increase has come in. But first thoughts, do you think that inflation has troughed out, Tushar? That's the indication the CPI gave us. Well, for the longest time, the inflation numbers were coming lower than our polls. Now it's at least started coming higher.
But actually, the February number food price rise was a little higher than what the seasonal element is generally in the month of February. Although it was a very modest rise, but it was still higher than what the seasonal trends have been in the past. And I think this month WPI would have been a little higher because of the food component only. I think otherwise fuel would have remained broadly unchanged. Manufacturing would have remained around 2.5–3%. But overall, I think yes, I think as you pointed out, it could be a bottom for the food price cycle. But what we are working with as an assumption is that food prices would go up sequentially, but it would not be a very substantial rise. On average, inflation would still be in the comfortable zone of what RBI is trying to target at.
Okay, well, still awaiting more details on whether it is food indeed that has pushed up the numbers. At the moment, all we know is that it's come in about 20 basis points higher than what our poll threw up. Our poll was giving us a number even lower than 2.7, as you can see. So it's a little higher than what we were expecting. But what exactly has pushed up the numbers is something which we have to wait for from the flashes. Tushar, do you think, therefore, the amount of expectation we should pin in terms of RBI dovishness decreases? How much are you expecting on April 5th and how much thereafter?
No, I don't think that dovishness would go down because RBI and also I think in general markets, everybody was anticipating that food prices would go up sequentially. Core, everybody had this questions in mind that, you know, it would be elevated for a little longer because of pickup in education and healthcare. So it doesn't really change things too substantially. I think April, you know, rate cut is still very much on the cards. There's a very strong probability of a rate cut in April. After that, I think it would really depend if the food price reversal is very sharp or not, if the core price elevation is a sustainable one, or it could come down. But I think April rate cut is quite likely.
Okay, all right. Now we have some more details coming in. The food articles index is down 0.2% on the month. But last month it was, I think, down, okay, 0.07. So it's not, food articles are not showing any, you know, increased penchant of rising or anything like that. Food articles were flat in February and were flat in January, and they remain flat in February. Not much of a change. The fuel and power group index is up 1.7%. Manufactured product index is up 0.2%. I'm reading all month-on-month figures. And the all commodity index is up 0.3% month-on-month. The vegetable index is the one that is down most. It is down 7% month-on-month. But all these are month-on-month articles. Maybe I should give you some bit of the year-on-year position as well. Manufactured products year-on-year is up 2.25. Fuel up 2.23. And food articles is up 4.28% year-on-year. Now, food articles was up 2.3 in the previous month. This month, we are seeing a bit of a jump in food articles if you look at it on year terms. From February last year, food article prices have jumped 4.38%. That's the number I'm getting from the wire services. Okay, so once again, how would RBI look at it?
I think manufacturing is a little lower than what we anticipated. Okay. Food, even though it is flat, February it goes down. So I think flat also higher than
an indication of
indication that it is, you know, bottoming out. Fuel, I think, is likely to remain somewhat subdued throughout the year because oil prices are not likely to rally too substantially. So overall, I think the risk at this moment is food. But it's not a very big risk at this moment. I think it is expected to go up sequentially. If it starts going up in a very large fashion, then it might change the overall story. But I think at this moment, the dovish story stays intact.
Okay, so it's what, one cut in April and none thereafter, or some more thereafter?
I think there is a chance for a second rate cut also after the April one comes in. But for that to happen, I think we'll have to wait as to how the monsoon pans out, how the global food prices actually pan out. What sort of reversal are we seeing in domestic food prices? What sort of kharif output is there this year? So the second rate cut, I think, is likely to be dependent on multiple factors on which maybe we'll get clarity by June, July. Okay. But April, I think this number should not really change the story for RBI.
Okay. Just one point here, when I'm looking at the way the money market's also reacting. So not much change in the benchmark yield, just about 1 basis points. It's 1 to 2 basis points. It's all that we've got. This is the 2029 paper, the new 10-year. That would also be a function of the liquidity measures that the RBI has recently announced, I suppose. So right now, the market not too perturbed with the jump in food prices. Is that how we should read it?
Yeah, actually, there are two things. One, that WPI is not the index.
CPI.
MPC follows. The MPC follows the CPI index. Secondly, actually, what you point out is right, that things are all over the place. The core inflation has come down. The WPI core is down in February to 2.3% compared to 2.9% in Jan. And what is even more intriguing is, or important is, December WPI inflation, you get the final numbers after 2 months. That has been revised lower. And how? Yeah. From 3.8 to 3.46. So there are two dovish factors here, with core being lower in Feb compared to Jan, with December inflation being revised even lower than its already low levels. And that's not unexpected, because yesterday, when the CPI numbers came, or rather, day before when the CPI numbers came, we saw the January numbers getting revised lower. So there are enough dovish factors on inflation, and minor, probably, if you can call it hawkish, that food inflation has probably troughed out. So net-net, I'm not surprised at all that the bond prices have not reacted, because there is a fair number of factors on both sides. But Tushar, last word from you. Where do you see bond prices headed? What's the HDFC Bank view?
I think our September call is that the new paper could touch 7.75% level,
really?
and that's because I think markets could get jittery about the heavy supply next year. 7 lakh crores is a big number, although there are heavy redemptions also next year. But I think also if you add the SDL burden coming in for the markets, I think there could be reluctance to take that kind of supply next year. Yes, rate cut is happening. That might, somewhat curtail the losses on the bond market side. But I think there could be a brief period in the interim when, if the third rate cut market starts pricing in, they would maybe start buying bond for a brief period. So we could see an interim period where bond yields could go down very marginally. That's a very shallow and short-lived rally that could happen. But by September, I think because of the new supply coming in, because of the new borrowing calendar getting kick-started, I think we see yields going up.
Okay, so that argument really shifts all the way away from inflation to fiscal deficit. Your inflation can be 1%, but if the government is hell-bent on borrowing so much and banks are not that interested in buying those bonds, then you would have a problem. So, short point, just to wrap up, the inflation number has coming in slightly higher than expected. That's largely because of food inflation. Food articles inflation on a year-on-year basis, as I told you, is 4.28% compared to 2.3% in January. So, food definitely has bottomed out. But for to counter it, we have a core inflation number that's come in slightly lower for WPI, and the December inflation also revised lower. So, it net leaves the bond markets unruffled at this point in time. But as our expert pointed out, government borrowing will be another story. We will know that issues. We will know that on March 26th, I think, the borrowing program for April, and thereafter, I guess there will be an upward pressure on yields. And
for now, you're also holding on to the call that we will see a rate cut on the 4th of April and another one, perhaps in the later policies. Thank you very much, Tushar and Datta, for taking us through the discussion on the February WPI figures.